Active crypto trading, not crypto investing, but active trading is a clear player versus player game. Somebody can time the market better than somebody else, and so the people that are better informed, that are early, they tend to make all the money. If you bought into Pump.fun early, you made all the gains. If you bought into the Virtuous protocol early, you made all the gains. And now there is another project that might again blow up. Now, nobody knows what the future holds, but we can already see how one token by a new launchpad on the Solana chain is currently taking off. And the question is, can this potentially compound into future releases? So here's what I mean. Imagine you went into Pump.fun ecosystem tokens in March of 2024, so 1.5 years ago. We saw an initial wave of adoption, then a slowdown, and then the real rally. Now there is Heaven.xyz. Again, another launchpad with a nice design, with a similar setup. So tokens can be created until they get migrated and are above 100k in liquidity. And the largest of those tokens is the Light token. And it's already got 108 million of market cap. It has actually grown already enough to be the 5th largest trending token on the Solana chain in terms of liquidity. Have a look at the large trending tokens on SOL. Light is at number 5 with liquidity of 5.1 million. In the last 24 hours, we saw roughly 5,000 wallets interacting with the token. There are less buyers than sellers, yet the price is going up. In other words, the buyers tend to move more capital than the sellers do. And so the fundamental question, of course, is, are we still early? At least when it comes to the Light token, there are not yet that many holders. On the Solana chain, there are only 11,853 wallets that hold some part of the token. We also see how all of the trading volume still happens on decentralized exchanges. So there's no MEXC, there's no KuCoin, there's no Binance involved yet. Now, of course, there are many tokens and many platforms that initially gain some traction to then just completely get destroyed and get dumped. If the same will happen for the Heaven platform and the Light token, that's yet to be seen. The situation does remind me though a little bit of what happened early with Fartcoin. Have a look at this video published on the 24th of October when the price was still at 5.3 cents. Subsequently, Fartcoin went up more than 3,000%. It went above $2. I try to always be early on this channel and I publish videos on various altcoins regularly, so feel free to subscribe over here. Something very similar recently happened with the Troll token. Again, one of the trending tokens on Solana. It's now the 4th largest token in terms of liquidity. It's got 5.2 million. It's currently at 18 cents. The first video on this channel was published when we were at 3.7 cents, and that's not so long ago. That video came out on the 28th of July. Bets like this always have extremely asymmetric return, as in there is a very high chance that the token goes to zero, but there's also a non-zero chance, hopefully 10-20%, that it does make a multiple X return and then potentially can make up for the losses that are all produced with those other tokens that didn't make it. Risk management is extremely important, and right now the market cap of Light is at $132 million, and it's not even yet listed in the Solana meme coins category. It would be slightly smaller than the Melania token, but there's of course plenty of other meme coins on the Solana chain that are much larger. The price could easily double, maybe even triple from here, and then any growth beyond that has to be supported by the centralized exchanges and the market makers, which are, by the way, again, not yet involved at all. Now have a look at the following on-chain data. It shows us the growth, the current momentum of the token. Light is seeing more and more first-time traders per day. Initially, we had our launch, then things slowed down, but now we are growing faster and faster. We can ignore the latest data point because today has just started. We can also see how the number of recurring traders is growing over time, but it's not yet outpacing the number of first-time traders, and this is good. It shows us how the investor base is expanding. Now over here are 3 charts. On the left side is the number of retail investors, in the middle is the number of medium-sized investors, and on the right side is the number of whale investors. The way we make this distinction is by looking at minimum holding thresholds. So how many tokens are held in a particular wallet at a particular point in time. To be counted for the chart on the left, a wallet has to hold at least 5,000 Light tokens. At the current price, it's roughly $1,000 worth of the token. For the chart But in the middle, we go a 10x in minimum holding. So that's now $10,000 worth of the token. On the right, there's another 10x. So that's $100,000 worth of the token. We can see how the number of whales is not really changing. We can see how the number of medium-sized investors initially sold off, now accumulate, and we can see how the accumulation by the small retail investor tends to be the fastest. So those numbers would suggest that this is a retail-driven rally, but that's actually not true. The number of whales is not going up, but the supply that's held by the whales very much is. The existing whales are buying faster and faster. And while at the beginning only half of the token supply was held by the whales, this over time went all the way up to 80%. So I think this is a sign that the market makers and the centralized exchanges are secretly now, for their market making, for their launch of perpetual futures potentially, buying the token on chain. The market makers see the growing interest by small retail and thus accumulate aggressively. So I wouldn't be surprised at all if in the next days, potentially in the next weeks, we see announcements how MEXC, etc. will allow trading for the Lite token, how there might be also a launch of perpetual futures, where then the short-term levered capital can also get into the token. So in the end, buying the Lite token now is not necessarily only a bet on retail, it's actually a bet on the market makers continue to buy. They seem to already buying right now. And here's the problem. There's just so much correlation within crypto, right? Everything is going up or is going down at the same time. For example, this year, everything went up, but during bear markets or during shorter periods of time, everything can also go down. So it seems like it doesn't even matter that much what kind of altcoin we pick here, right? It seems to matter more what's going on in the macro. Where is capital shifting? Does it make sense to study all of those white papers, to study all of those tokenomics, to study all the details and the founding team and the investors of all of those cryptocurrencies, when in the end they all go in the same direction at the same time anyways? I actually have a background in finance. I studied financial analysis and investment management in Hong Kong at HKUST. And over there, we learned about the concept of correlation within asset classes. This is not something that's unique to crypto. This also happens in the stock market. And there are quite smart ways to manage this actually. What we're seeing over here is now an example with the stock market. So in green, this fat green line, that's the Nasdaq 100. But then we've got these other squiggly lines, and they tend to move in the exact same direction at the same time, as we also see with the altcoins in crypto, right? The red line, for example, is Amazon. This pink line is Google. This purple line over here, that's Microsoft. So they all behave the same, even though the business models are really not the same. What I've learned in university is that there's a common approach called delta neutral investing. So we want to bet on an asset, but we want to take away the overall macro environment. We don't want to speculate on where the overall macro is going, if there will be a bull market or a bear market. We are just certain that one asset will do better or worse than another asset. So let's say, for example, here, we've got the Nasdaq 100 in green and we've got Netflix here in purple. And when the Nasdaq 100 is going down, then Netflix is also suffering and vice versa, right? Again, we've got all of that correlation happening. And we don't want to bet on the overall macro. We're just certain that Netflix will do better, for example, right? Let's just play with that assumption. What we then can do is we can go long Netflix and we can go short the Nasdaq 100. So since all the assets correlate all the time, once we go long one thing and short the other thing, we're suddenly canceling out the overall macro environment. So it doesn't matter if the market as a whole is going up or is going down. We are only speculating that Netflix in this example will do better than the rest. And suddenly, when we look at Netflix relative to the Nasdaq 100, we've got quite constant outperformance. And we can also at least get somewhat of an idea at what point in time Netflix might be cheap or expensive. So this is a completely market neutral chart. Just compare this with the Nasdaq 100, right? Those kind of moves to the downside or to the upside are not correlated with the overall Nasdaq 100 chart anymore. The Nasdaq 100 can crash massively while this relative valuation doesn't move much. So we're really taking away the macro. In other words, we don't have to think about anymore where the overall environment is going. Actually, now our idiosyncratic knowledge about a single asset can be turned into money without being exposed to whatever's going on overall. For example, let's say you've got the following thesis in crypto. You look at the different decentralized finance protocols and you think that Aave as a borrowing and lending platform has a lot of growth. So this is the total value locked, or the capital that's in the Aave platform. It's growing quite a bit. And your bet is that Aave is better than, say, Balancer. This is BAL. This is total value locked of BAL. It's not growing that much. So your thesis is that because of that, the Aave token should also do better than the Balancer token. Here's the Aave price in US dollars. Sometimes it's going down, unfortunately, because the overall crypto market is going down. But Aave relative to Balancer is not going down that much. It's just going up. This is now on a logarithmic scale. Here's the same chart now on a linear scale. Isn't that nice, right? This is really constant growth. It looks much better than buying Aave directly, right? This is going up and maybe down, who knows, based also on the overall macro. And this is what investing is all about, right? We want to get the best risk-adjusted returns. We don't just want to make our 5 or 10x. We want to make this with as little volatility as possible. We don't want to crash 60, 70, 80% in the meantime if we don't have to. And there are ways, again, to mitigate the risk. We can cancel out the overall macro. And so there's another reason why Aave is doing so much better than Balancer. Have a look at the number of circulating tokens over time. This was at 13 million. And yes, over the years, over 4 to 5 years, this grew to 15 million. But still, this isn't really that much growth, relatively speaking, right? It's maybe 20% or so over the course of 4 to 5 years. But then compare this with Balancer, right? This started out at 19 million tokens, and this grew all the way to 69 million tokens. And that happened over a similar time frame. And so this is the perfect setup for a relative valuation bet. This is my preferred way to bet on any market, in crypto, but also in the stock market. The idea is that we don't want to predict where is the stock price itself going, where is the altcoin price itself going. We don't have to predict this because we don't know what happens with the overall market. Instead, all we need to do is we have to say A is likely going to be better than B. And so we go long A, we go short B. And tokenomics, as in an expanding supply in the altcoin market, is always depressing many altcoins. Just have a look at the weekly issuance in the altcoin market that are here tracked by Tokenomics.ai. It's almost 1 billion every single week. If there's not 1 billion of additional demand for those altcoins every single week, then the altcoins go down. And so I'm following this strategy already for quite a while, roughly 4 years, and I've also opened a copy trading strategy 1 month ago. Now, due to high demand, unfortunately, I had to close future deposits, but it just goes to show how nice and constant we can make money with this approach. This is now annualized 74%. Yes, it's not a 10x every few months, but it's much faster growth compared to just investing in stocks or even Bitcoin and Ethereum for that matter, long term. It's all about risk-adjusted return, right? The maximum drawdown here was 2.6%, while we are analyzed at 74%. So the premium members that signed up on time, they're getting exactly that return. But since the deposits are now closed, most people are now manually trading whatever I do. And so I try not to promise anything unrealistic. Most other YouTubers, they just say, here is the next 5 or 10x altcoin. But those altcoins, more often than not, they simply just come crashing down. I just try to compound the current wealth as quickly as possible without taking on too much risk. And yes, there is a slight learning curve to this, but it's all doable. All you have to do is watch 2 major videos using perpetual futures on Hyperliquid to bet on relative valuations, and then also, at least as important, risk management with relative valuation bets. Because again, you don't want to gamble with 50x leverage your entire portfolio and then lose it all. You want to constantly grow with little volatility because the venture capitalists and the insiders are dumping on retail constantly with their newly created tokens. This is how we make money. We put ourselves in the same shoes as the insiders. We make money like the insiders do. They dump on retail, we dump on most retail holders as well, because most retail holders just buy on spot and hope for the best and then lose in the process. They might not lose as much in the current market where everything is going up, but most people still, even in a market like this, do underperform just buying and holding Bitcoin and Ethereum. After you have watched those 2 videos, I'm simply sharing all my trades as I'm opening and closing them. And you can just blindly copy trade, but of course, ideally, I prefer if you continue learning more and more, because I do believe that crypto is not just a game of luck, it's a game of luck and skill. And the more skill everybody has, the more edge we can carve out of the market, the more money we can win against others. Premium is currently $125 per month. If you don't like it for whatever reason, just message me within the first week and I will refund you 100%, no questions asked. If you decide to sign up even for the annual membership, then you will get priority access to the next copy trading pool. So I will open another copy trading pool at the beginning of next year, and all the annual subscribers will get access to that first before it closes, of course. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.